So I'm going to try to make this as simple as possible. And I'm not a financial advisor. I'm just somebody that's been doing this for 40 damn years. So pretend that red line that you see there, that's the inflation. Let's just say that inflation's rising by X percent, 3% every year. And over here is whatever year, let's just say 1980, and this is today. Okay, that red line is going to be the value of or it's going to be inflation as it's rising over time. This other line here, we're going to call that the silver spot prices. Okay, so we're going to pretend that that's the silver spot prices in relation to inflation, which it's not exact, but I've made videos where I can show you that silver has been going up with inflation. It has to, because the production costs go up, then the silver price has to be sold for at least that minimum production cost, or it's not worth mining. They're going to drive the price up, or it's not even going to sell at all. They're just not even going to bother. They're going to turn the spigot off, and you know what I mean. So this is let's pretend that the blue there is the spot prices. So are you buying here on the up and then thinking it's going to keep going up? Because that's not the way to do it. I read so many comments in YouTube and other websites, and it's got me scratching my head. And it's unfair for me to judge somebody who just got into this, because I've been doing this for 40 years. But it didn't take me 10 years to figure it out. Within probably just a few months, I realized, oh, okay, when I'm looking at all this stuff, silver's not going to go exploding, and why would I want it to? You want to buy here, the little dip down there. You see these dips? That's where you want to buy, because when you buy on the dip, so let's just say that's an 8% or a 12 or 15% decrease. Like, say, from here's a spot, this is like a 30% increase or a 20% increase, and this is a 15% and what I mean is below spot, or below it's dropping down 15%. It's going up 25%, the prices are, right? So when you buy on this dip and you hit all of these dips all through here, what happens is you bought it when it was way down below, the amount that, say, would be rising with inflation. You're buying it on a dip so that the cost is less than the average inflation cost, the inflation, how inflation keeps going up. And what happens is when you get to the end of the road up here, you're going to find that inflation has driven the dollar value up to here, but you only paid somewhere down in this neighborhood for all your silver. When you bought on all these dips, you're going to be down in here. And that means that the value, what you paid for all those silver, if you had just, say, bought it, let's just say you bought it right there, and you're buying it every single time you're buying it, you're hitting the exact percentages you need to just keep up with inflation. Well, okay, you're doing good. You're keeping up with inflation, right? If you bought it on all these high spots, well, you're going to be spending more money than you needed to with the silver. But if you bought it on all these dips, when you get to the end of the road, you're going to be, I'm going to imagine somewhere right about there. Let's look at the dips. Maybe right in there. So you're going to probably be maybe 20% below what you would have been had you bought at the points where it was, say, worth as much as what it should be, kind of like, say, with inflation. What I mean is inflation went up 3%, the metal went up 3%. Inflation went up 3.5%, the metal went up 3.5%. If you had been buying exactly on those spots, then the metal, you're gonna ride the inflation amount out, but you're not really going to be ahead anything. And that's okay, but it's better if you buy on these dips, and then at the end of this, you have more metal. What it's going to mean is you have more metal than you would have had if you had been spending the extra for it, say, if you had bought the inflationary amount, like when it went up 3%, you bought it at that price instead of waiting for it to come down 8%. You buy down here on these dips, and these dips is where you dump your money into it. You keep money you keep fiat in the bank. You buy, okay, all along this line, you buy a piece here, you buy an ounce there, you buy an ounce there, you buy an ounce there, you buy an ounce there. Okay, that's fine. These dips, this is where you dump. If you're going to get into this game, I'm not a financial advisor, I'm just some guy who's been doing this for 40 years. This is what I do. This is why after 40 years, I am still overjoyed with silver. I am still overjoyed with buying metals. I don't get discouraged because I learned how to play this game right decades ago, and I play it right, and so there's no reason for me to be discouraged. I would buy my silver here and here and here and here. You can hold it out. Wait for it. Okay, good example is platinum. Right now, platinum's down to about $900 an ounce, right? But it was running about $1,000. It went up to $1,150, $1,100 here just over the last little while. Now, it went way up higher than that before, but we're going to leave that out of the equation for right now. Let's just talk about the more recent platinum that I bought, right? So platinum was costing me $1,150, and then it was costing me $1,050, and then it went down to $850. And so I went and bought it. I think I got the platinum when it was $859, something like that, through last year, if you look at the chart. Well, of course, I'm going to go out and buy a few ounces. So I went out for a few ounces. And so what I did is I bought it it was actually below the production cost, I believe, at a point, because everything I'm looking at says $900 an ounce to produce platinum. It was $859. So not a lot below production, but it seemed like it was below the production cost. So yeah, I'm going to go buy some. That's what you want. The reason why you want this, the reason why you want to buy on the lows, screw the highs. The highs are irrelevant. Because like I said, what happens is as you're buying on these lows, your investment cost, your investment over the years, you're going to be beating inflation. And beating inflation by 20 or 30 or 40% maybe, depending on these lows, how often you can hit them and how far they go. You can't rely on the highs. You can't really rely on the lows. So if you're just riding inflation out, you're good to go. But if you're buying on these highs, so say you bought right there, it's going to take you a long while. You're going to be over here somewhere before you even come close to breaking even if you're buying on these lows. You have to be careful with this. Don't buy when it's higher. This is what research is about. You have to research your investment. You have to research your investment because you need to know what does silver do on any given year? What does silver do in any given decade? It actually matters. You can think, well, I'll just buy now and then whatever happens, happens. That's not the way to do this because you don't know what the foundation, what the basis is. You don't know where your starting point is. You have to know what silver actually does over the long haul to know, okay, oh, I see what's happening here. This is a spike. That ain't going to last. It's going to do this at some point. And this little spike here, that ain't going to last. It's going to come back down because something's beating the price down. Something always beats the price down. The price goes up, you know what happens? People dump. Drives the price down. People can't get a hold of it. So the market gets flooded. The price goes down. People buy it all up again. There's nothing available, and so the price goes back up. That's where we're at now, say, with gold. The reason why gold is higher is because looks like China and some of these banks and countries have been hoarding gold, and you can't trust it. It could come down, they could start dumping it. It's doubtful, but they could. And then all of a sudden you've got, okay, the price is trashed. You know, and that's why you've got to understand your investment before you get into it. Learn to ride these lows. Learn to look for these lows. Learn to buy on the dips. Forget the spikes. The spikes are irrelevant. The only thing them spikes are good for is if you want to trade some metals for some other metal, or if you want to cash out a little bit or all of it. That's all those spikes are good for. That's all they're good for. And you cannot rely on them. What you can rely on is the red there. You can rely on inflation. The dollar is always going to keep inflating, and the only thing you're trying to do at the end of this is beat inflation. That's what the metal is for. You're trying to, if you only come out at the end of this game where you have got your inflated dollars back to keep them out of the system, then you did great. But if you can beat inflation and your investment is down here somewhere at the end of this game, and here's retirement day, and you've got say $300,000 worth of silver that you only paid $200,000 for because the price has inflated over the years, the dollars have inflated and you got more. Hey, more power to you. That's what it's for. That's what it's there for. If you beat inflation and you're 50% ahead of the game instead of like inflation, say, being 4 or 5 or 10%, more power to you, buddy. That's exactly what we're all doing. That's exactly what we're all hoping for. Get off this roller coaster. Get off the emotional roller coaster. You need to pay attention to those dips. Try to make your gain on the dips. Try to buy low and sell high. This is something that I don't understand. We have this proverb, buy low, sell high, and we're all running around like we're big-time investors. We're all Warren Buffett. Buy low, sell high. And then when it comes to precious metals, it's like our brain goes right out the damn window. We're buying high. We're buying on the spike. And I just want to bang my head on the desktop here every time I see that. You all understand buy low, sell high when it comes to the stock market. At least you claim to. And then when it comes to gold and silver and platinum, palladium, rhodium, and all that stuff, you're just like, what the hell with that? I'm going to buy high. And then I'm going to bitch about it when the price comes back down to that equilibrium that it's at. Doesn't make any sense to me. Y'all have a great day.